Good afternoon. Welcome back after the break. So, earlier today, Mark and Lisa painted, I think, a compelling picture of the technology investments that AMD is making and the way that we believe they're going to drive our client graphics business going forward. I'd like to take the next 25 minutes or so to talk to you about the enterprise embedded and semi-customs business, which has been a principal driver of growth for the last few years, and one that we think is central to the growth story of AMD going forward. But in introducing EESC, I first have to start correcting a misperception that, quite frankly, we had even within the company just a year or two ago, which is the enterprise embedded and semi-custom businesses are not really three discrete businesses. They are a set of businesses that share a great many things in common. They share technology. They share, in many cases, customers. Our embedded customers, or many times also our semi-custom customers. And they share a perspective around the best way to showcase AMD technology, which is, in all of these businesses, our customers are building products around the technology ingredients that we give to them and bringing differentiated solutions to the end customer that leverage AMD unique IP. And so we really think now at AMD of EESC as being a continuum of offerings, leveraging technology, customer relationships, and the modular design approach that Mark talked about earlier at both the chip as well as the systems level. And looking forward, the central tenets of these businesses are common and ones that we're focused on driving over the next several years. The first one being that we are focused at AMD on addressing vertical markets where our unique high-performance compute and graphics technology allow our customers to build those differentiated end-user experiences and systems. We're going to enable them to use those technologies by providing them vertical development kits, by providing them software, platforms where appropriate, and an open ecosystem of other elements from partners and the rest of the travelers in the technology industry to allow our customers to quickly embrace our technology. Very important in that approach is that word open. And Mark talked about our commitment to openness in our technology and particularly around our software. And we think that's so important because in today's markets, one of the things that really drives innovation is the ability to have open ecosystems. And so we are completely committed and double downing on our commitment to openness. And then lastly, Lisa also mentioned the semi-customs business, not necessarily just as a business, but as a business model. And I think that's absolutely true and something we've really recognized over the past year. We bring to this set of customers that continuum of standard products, lightly customized products, and full custom products, enabled by the technology that Mark and the teams have developed to rapidly assemble custom chips, and supported by that ability to do so with standard products and custom products sharing the same drivers, the same technology, but optimized for different points of scale. And so let me talk about each one of the market segments in turn. And we're going to talk in the same framework that Lisa introduced earlier, in terms of gaming, in terms of immersive devices, and in terms of data centers. Now, the one that is most familiar, I think, to people about the EESC business over the last couple of years is certainly gaming. Our flagship wins with all of the console makers in this latest generation of game consoles has been a huge driver of revenue for AMD. And the reason we won is because our technology allows us to give the users that compelling visual experience that they need, that they want, that draws them in to the game and into the product. And that compelling visual experience is a product of that combination of CPU, GPU, and software capability. That combination is what allowed customers like Sony, to provide the compelling experience of the PS4. If I cast myself back into Mark's role for just a moment and talk like a geek, I could talk about the nearly 2 teraflops of computing power that our graphics units provide to that. I could talk about the 8 x86 cores providing the oomph to run the game logic and the physics of the game. I could talk about the audio and video capability that we've added and the IP that we've created to make that a compelling experience. I could talk about the memory innovation that even in the current console generation, before we embrace HBM, has led to such a seamless and fluid experience in these consoles. I could talk about all of that, but the end result is what's important. The end result is that compelling experience. We are going to take the technology that we've created for this console generation, that CPU performance, that cutting-edge graphics, and very importantly, the fact that we have now developed a set of game developers across the industry who understand and are optimizing for the AMD graphics architecture to showcase the capabilities of these game consoles, to showcase the capabilities of the GCN devices, the GCN technology in PCs as well. We've got a great asset with a set of developers that now know AMD. We take those technologies and those assets, we deliver them in a set of embedded CPUs and APUs, discrete graphics, and that capability to do a full custom, we call it semi-custom, but let's face facts, it's full custom design where necessary, and we're attacking now new markets. The first one that we really pursued was casino gaming. And casino gaming is something we really got underway a few years ago and has really borne fruit. Lisa talked about the number ones in our business, and I'm proud to say we're number one in casino gaming worldwide, and we're growing rapidly, our share rapidly in that market, both in traditional, what you guys think of as casino gaming, as well as pachinko and patchy slot in Asia. But we're expanding the aperture. We now have significant design wins in cloud gaming. We're addressing military, police, and aerospace simulation. And we think about that, by the way, as gaming, because in both gaming as well as simulation, you're trying to create an immersive world and pull the user in. And then lastly, we do think that our technology, our core IP, is appropriate, and then with the memory innovations and the power efficiency is applicable across all form factors. We'd like to say from handhelds to holodecks. And so gaming is going to remain a key driver of the growth in the EESC business and for AMD overall going forward. Immersive platforms are the next key area for EESC. And on immersive platforms, we're really talking about platforms that are rapidly moving from just having a compelling front-of-screen experience, great visualization of medical imaging, great high-performance graphics for thin client applications, either on the desktop or they served remotely from the data center, to one where people are going to have truly two-way interaction with their device. Lisa talked about IoT user interface evolution, and we think there are compelling evolutions coming, revolutions coming, when your immersive device can look at you just as you're looking at it. It can discern what you're doing and your intent, and then it can act upon it without you having to go through the rigmarole of tapping something into a keyboard, drawing a finger across the tablet, or holding a game controller. Let's talk about that a little bit more. Next slide, please. So that first part of immersive experience is at front of the screen. Experience is pulling a compelling visual experience out to the user. If you look on Times Square at the largest, which is where we are, for those of you that are watching online, we're just off of Times Square, which, if you walk it, is one of the most amazing places in the world. Everywhere you look, there's visually rich experiences, incredible imagery coming at you from digital signs nowadays. The largest one, a block and a half north of here, is one of the largest screens in the world, powered by embedded Radeon graphics. And we've focused on providing advanced digital signage solutions for the last few years, and we're growing our market share rapidly there. That is coupled with our leadership and #1 market share in thin client, where we continue to grow our share and enjoy the growth of thin client devices as they become more and more prevalent in commercial installations around the world. What's fascinating to me is we're taking the APU technology that we've innovated in support of our mobile devices, and we're bringing that to medical imaging. We're bringing that to medical imaging to allow advanced diagnostic instruments, ultrasound, portable X-ray machines, have a set of capabilities that hitherto had been confined to very large fixed installations. But now with the power of the CPUs and the GPUs integrated together, you can bring that into small form factor medical diagnostic devices. And we think that's going to be very, very interesting to see how they evolve over time. Again, all of those enabled by our vertical development kits to allow our customers to more rapidly innovate. But when we look beyond this one-way experience into the two-way experience, I said a moment ago that the system is going to look at you, and I mean that literally. Many of you may be aware that over the last 2 to 3 years, there's been a fundamental set of breakthroughs in the field of computer vision, machine learning, and machine understanding, where the ability of computers to recognize faces, the ability of computers to recognize what objects and actors in a scene are doing has increased by an incredible degree. That revolution, those advances have been made possible by the incredible power of the vector compute engines inside of our graphics units. And they mean that in the future, that our machines will be able to look out at us, recognize us. As we walk up to a digital sign, is the person walking up a fashionista or a florist, and tailor the offering appropriately. And they'll be able to see us, and they'll also be able to see in augmented reality situations what's going on in the world, and then combine that with the analytic data that will make that a much richer experience. And so one example of that, say an engineer working at a car factory, watching as a car frame is being assembled and looking at the stresses and any diagnostic information on the materials as the frame is being assembled. In order to do that, you need several things. You need the horsepower in the back end to run that analysis, to do that finite element analysis to say, hey, what the heck is going on? But you also need the horsepower to understand. The computer to see, oh, there's the car. I don't want to fix the engineer in one space so that I know, in that case, I know exactly where the car is at, and so I can just assume and overlay the data. No, I want the engineer to be able to walk around, be able to inspect from any angle, and that requires that machine understanding. And so the horsepower to understand is something that AMD is one of the very few companies can provide in the industry. It's that graphics, that GPU powered compute engine that is so important for enabling these new machine learning algorithms. When you combine that with the HSA, Heterogeneous Systems Architecture, software and platform innovation that Mark talked about, you have an open innovation framework that allows users to harness the power, developers, to harness the power of CPUs and GPUs and to use them much easily than they ever had in the past. Again, we're going to couple that technology to a delivery mechanism where we can deliver embedded APUs or CPUs, GPUs, or semi-custom. And we're going to fire, like a laser, an intelligent signage, not just advanced signage, intelligent signage. We're going to fire like a laser at augmented reality for commercial applications. We're going to fire at advanced medical diagnostics that not only present a picture to the clinician, but they also provide analysis. Hey, this might be a tumor. This might be a break. Look here. And of course, for industrial heads-up display or automotive cockpits, where self-driving cars need this machine learning capability in order to understand and interpret the world. And AMD is really one of only 2 companies in the world that have the technology to power that fundamental engine. And so we're hugely excited about the wins we've already had in immersive platforms, but what we see going forward. But I tell you, I joined AMD 6 months ago, and the reason I joined AMD was not because of the exciting opportunities we have on gaming and immersion. I didn't fully recognize and appreciate it. Now I'm pretty excited by them. But I'm even more excited at the opportunity that AMD has in the data center. The opportunity that AMD has to get back into the enterprise infrastructure and to really do so at a time when enterprise infrastructure is undergoing a number of significant changes. The first one is, look, everybody in the room has heard about software-defined networking, software-defined storage, software-defined this, software-defined that. I like the one wit who came up with, we should just have software-defined software and close the loop. But really, it's software-defined everything. Proprietary hardware is dying across the enterprise, not just in the traditional data center, but in telcos, in just about every field of infrastructure. And the server won. But as that transition is occurring, that means that performance demands are unbounded. And so the companies that are going to win are the ones that can provide the right solutions to meet those incredibly difficult performance demands. AMD is one of the few companies that has demonstrated the ability to service this market. We're building upon our heritage of innovation in the data center when we introduced the first 64-bit x86. We introduced the first hardware virtualization support. We introduced the first multi-core CPUs. And we're introducing the first APU server relevant technology. We're going to take that heritage, we're going to take the technology that Mark and team have created, and we're going to couple it with an approach that, number one, provides the ecosystem innovation and choice. 7 months ago, I was a customer of AMD's. And I can assure you that as a customer in the enterprise space, the need for a choice, the need for a choice to drive competition, to drive innovation, and to drive the economics of the market has never been more dire. And so AMD is going to get back into the x86 server market and provide that choice. We're going to do so by offering our customers a choice of technologies as well. x86 is obvious, and Mark and Lisa already talked about that. ARM, we're going to offer as well. And ARM will be important over time in the general purpose x86 server market. But in the intermediate term, perhaps the more important and more interesting opportunity is to capture some of that enterprise infrastructure that's moving to the server base. In many cases, the embedded processors inside of that networking, proprietary networking or storage silicon are MIPS or PowerPC. Those architectures are dead. And so there's an inflection point that customers are already going through where they need to migrate their software base, even as they're extending it to take advantage of the performance that you can run on a general purpose software, general purpose server. ARM is hugely important for some of those markets, and we think that much of that volume will be captured by ARM-based server infrastructure. And so the ingredients that we have already been revealed to you somewhat by Mark, but let me turn up the contrast one place. High-performance x86 and ARM CPUs that have the performance level that are competitive with the highest performance level in the industry are absolutely critical for playing in this market. We've made the multi-generational commitment to introduce those cores and to maintain that core roadmap over time. Our GPUs are going to become more and more important to the enterprise infrastructure. Machine learning, machine understanding, computer vision, all are going to be incredibly high growth areas for GPU acceleration, as well as the more traditional HPC applications of GPU that we already know. We're going to continue the memory innovation that AMD has introduced in the past. We were the first people to introduce the memory controller onto the CPU. We're the first now to introduce HBM to the graphics realm. You'll see us continue to innovate and provide more innovative and higher bandwidth solutions than our competitors. And we're going to be open. Not just open on the software side, we're going to be very open for partnering and innovation on the hardware side as well with other folks in the silicon ecosystem. And that's something where you see more and more some of the competitive ecosystems are trying to close off, which I think is antithetical to the fundamental tenets that have driven this industry over the last 25 to 30 years. The opportunity, obviously, is to offer choice in that 10 billion plus server processor market, that 4 billion plus networking processor market, and that 2 billion plus storage processor market. The lead in machine learning, particularly by taking that open approach to enable more rapid innovation across the ecosystem. And also to take advantage of the fact that much visualization and workstation deployments are moving into the data center. We're uniquely equipped to take advantage of that as well. Short term, in 2015, you're going to see a couple of things from us. First off, you're going to see us introduce the Opteron A1100, which you may know better as the chip called Seattle, codenamed Seattle. It is a true enterprise class chip powered by ARM A57 cores that has all the redundancy, the reliability, the manageability, and the deployment features that people expect and demand before something goes into their data center. We've been working very closely with the ecosystem to get ready for ARM in the enterprise for quite some time. We first sampled this chip in the first half of last year, and we've been working very closely with our ecosystem partners to get the software, both from the operating systems, the drivers, the tool chains, the developer kits ready, as well as to get the right development platforms and end systems utilizing this technology ready to go. You'll see us in the second half of the year, along with our ecosystem partners, introduce really the first true enterprise class ARM enterprise infrastructure, ARM server powered infrastructure in the second half of this year. The ecosystem is finally ready to go. You'll also see us continue to you'll see us actually double down. I'd say continue. We've had the GPU technology for some time, But you're going to see us double down on GPU in 2015 and beyond. We've got some great chips already. The S9150 FirePro card has 33% more memory than the highest memory capacity NVIDIA card, and its baby brother, coming, will take that lead up quite a bit. We have 77% more double precision floating point performance than the highest end NVIDIA card today. And if you look on the supercomputing list for the Green 500, #1 spot since November of last year has been and continues to be an AMD FirePro powered supercomputer that has the highest energy efficiency and performance on that list. One area we're going to double down is that open area. And again, I don't want to overly belabor the point, but I'm going to overly belabor the point. We think that innovation in the enterprise nowadays, particularly in these new areas, is fostered and accelerated through open source communities and open collaborative innovation. We're going all in. Open source drivers, open source libraries, open communities. And where we do have additional new features, we're going to introduce them in a standards-based way. So GPU virtualization, for example, we could have taken a proprietary approach. Instead, we're providing the industry's only standard SRIOV virtualization support and bringing that into GPU. Looking forward beyond 2015, next slide, please. Looking forward beyond 2015, we've got an even richer roadmap. So the first is, of course, the next generation Opteron. The chip using that Zen core. No, I'm sorry, I said that wrong. The chip using many of those Zen cores to deliver a level of performance to the and competition to the x86 server market. High core count with full multi-threading, disruptive memory technology and memory bandwidth to provide extremely high performance, and high native I/O capability. What do I mean by those last two? I mean, we're not just going to produce high performance cores. We're going to do the same thing that AMD has done whenever it's successfully disrupted markets and made an impact. We're going to innovate. We're going to differentiate. We're not going to just do the same thing. We're going to provide differentiation that allows our customers to build demonstrably superior systems for particular workloads and particular tasks. And the opportunity for that has never been better. I've been in the server industry for a long time. I can tell you it's becoming the car industry. 15 years ago, you maybe needed a sedan and a minivan to service the needs of 95%, 99% of the x86 server market. That's no longer true. The new workloads, the new applications, the new scale deployments mean it's never been more important to have different points of optimization, different types of systems, and that gives us great opportunities to differentiate and provide unique solutions. We're going to bring out ARM into the data center, and using K12 offer the highest performance ARM server CPUs to the market. It will be true enterprise class devices. Again, we're the only guys in the ARM ecosystem that have experience delivering and supporting enterprise class server CPUs for an extended period of time. And then we're going to bring that APU concept fully into the server realm. I have high performance server APUs offering not just high performance CPU cores and memory, but multi-teraflop GPU capability, providing a level of performance for machine learning, a level of performance for finite element analysis, a level of performance in memory bandwidth for the reverse time migration algorithms that the oil companies use to do reservoir simulation. We think we've got unique and compelling technology that only is possible by wedding together that CPU, that world-class GPU, and combining them with an open standard HSA software interface. Across all of these, we're going to have security. Mark talked about one aspect of that security, which is our ARM trust zone processor and infrastructure. But we have many other innovations as well. Some leverage, ironically enough, from our game console technology. And then finally, we've got that semi-custom capability, that semi-custom business model that allows us to much more rapidly assemble the right standard product for that bifurcating server market, that car-like industry, but also provides us an easy path to optimize for cloud service providers or for large customers of all type that may need or may benefit greatly from a fully customized part that incorporates our IP and theirs. And again, that's a capability we've demonstrated now, and that's a capability we're going to bring to the data center market. And so if you put it all together, next slide please. If you put it all together and look forward, over the next few years in the data center, the opportunity for AMD is tremendous. And I am incredibly excited, and my team is energized by what lies ahead. We're going to re-enter the server market, providing choice and competition to our customers, to the ecosystem, and providing innovation to help accelerate the market. We're going to drive GPU and APU technology into the mainstream, lower the barrier for developers to use GPU acceleration, and make it much more accessible through and enable rapid innovation through that open and partner-friendly approach. And so, like I said, the data center was the reason that the data center opportunity, the opportunity to disrupt there is why I came to AMD in the first place. But you add to that, in my set of businesses, the opportunity to continue to expand our gaming franchise and to help lead and innovate as devices truly get immersive and two-way. And I think EESC will not only have been, but will continue to be the principal growth driver for AMD going forward. So thank you all very much, and with that, I'll turn it over to Devinder.
Good afternoon, and also to those on the webcast. Today is really a day of firsts. This is our first time doing a Financial Analyst Day from the NASDAQ, where we started listing on this stock exchange earlier this year on January 2nd, to be specific. The other thing is, it's the first time since 2012 AMD is having a Financial Analyst Day. And for many of you, I know you've been waiting for a long 3 years. We're going to lay out for the first time in that time period a long-term financial target model that I'll get into in a few minutes. Now, having heard from Lisa, Mark, and Forrest, I'm sure the question in your mind is, how does this all add up financially? How does it all add up financially? And what I'm going to do is, as Lisa said earlier, talk about 2015, because reading what is in the press these days and some of you writing about AMD, I know there's a lot of concern about 2015. So we'll lay out 2015, especially the second half, and then get to the longer term in terms of what we think we could achieve with everything that we have heard this afternoon. So let's get started. The things I'm going to cover today is, PC challenges have been there since the PC market shifted pretty dramatically in the second half of 2012. The fiscal management that we have had over the last few years has been challenging, no doubt, but I'll cover that. And I'll go back a little bit in the story that you heard in terms of the current to show you what we have done and how we have managed and what we can do if, for whatever reason, the PC market continues to be challenging. The second thing is the things that we did in 2014 in particular, what financial flexibility we have created for ourselves as we got ready for what is ahead of us for the next few years. The 2015 financial expectations, in particular the second half, and then the capital structure and liquidity profile from my standpoint over the next few years, and then, as I mentioned earlier, the long-term financial model. So as Lisa said earlier, to tell a story, you have to know where you are in the current, but I want to go back a little bit. And I want to go back because what we went through in 2012 and what we're going through right now, there are some similarities. The PC market continues to be challenging, and AMD is still here after 3 years, getting ready for the fight for the future. 90%, if you were at AMD's Financial Analyst Day in 2012, you would have heard 90% of the revenues is from PCs. $600 million of OPEX on a quarterly basis. High near-term debt maturities coming due in 2015 and 2017. Complex R&D processes, and you heard Mark talk about how he has significantly changed the R&D processes over the last few years, and finally, inconsistent profitability. If you go back and look at the revenue, so what did we do? The first thing we did, and actually we started it even before 2012, we needed to diversify AMD's revenue, and we were able to do that very successfully by having about 40% of our revenue coming from the embedded, enterprise, and semi-custom segment that you just heard Forrest talk about. And that growth businesses, the enterprise, the embedded in particular, and the game console semi-custom businesses, it was driven us to that transition. If you go to the, on the OPEX side, you've seen us taking actions. I talked about $600 million per quarter in the early part of 2012. We did a lot to bring the OPEX structure down from an affordability standpoint and also to reduce the cash burn. And we've taken it down in 2014 alone to the $350 million level. That's a 36% reduction in OPEX from Q1 of 2012. How did we do that? We had obviously a lot of restructuring actions. We took real estate, facilities-related actions. In the PC space, when revenue goes down, there is significant amount of marketing dollars that are deployed in winning PC business. We chose not to pursue some business that was not profitable. Didn't make sense for us, especially with a long-term roadmap, and therefore we were able to bring down our sales and marketing dollars and continued with G&A efficiencies. In process technology, and in particular with the R&D model that Mark implemented, we were able to reduce R&D costs. And on top of that, with the semi-custom model that we've implemented, we are deriving today, and it doesn't show up on the R&D line when you look at AMD's P&L, we are getting about $100 million plus R&D funding in the semi-custom NRE business model that we have today that helps us obviously do some of the things in our semi-custom space. So managing through the PC challenges, one of the things we had to do in that time frame was first half of 2012, we made money. PC market shifted, and for the next 12 months, 4 quarters in a row, we lost money. We managed our way through that with some of the actions that I talked about earlier, but really found a path to profitability, and in the end, were profitable in 2014. So this allowed us in terms of taking advantage of the situation in terms of the opportunities that something like this presented. And one of the first things we did in the 2014 time frame, you go back and look at the 2013 time frame, the debt profile of AMD, this is what it looked like. We had $1.1 billion of near-term debt maturities coming due, as I said, in 2015 and 2017, $1.1 billion, and we are losing money in the tail end of 2013 until we got to the 2014 time frame. The action we took, right, in the 2014 time frame with the debt transactions, as I stand here today, having paid off $42 million of convertible debt that was due on May 1st, just a few days ago, we have no term debt maturities for the next 4 years. No term debt maturities. That allows us, from a viewpoint of the flexibility, to go pursue the transition and what's going on with the businesses that Lisa and Mark and Forrest talked about. The other thing we did is we were able to bring down our weighted average interest cost. It was about 8.4% before the debt transactions and 7.1% after that. So 130 basis point reduction that allowed our interest expenses to go down on an annualized basis by about $16 million. $16 million. And then finally, we put in place, right, a cash profile to manage the business. And for the last 5 quarters, if you have seen AMD from a viewpoint of the cash, we have a target of cash from $600 million to $1 billion. That's our target zone. And we have managed the cash closer to the higher end of the optimal range. And on top of that, we put in place an ABL facility to the tune of $500 million. We have this facility available to give us flexibility when we need it. And in fact, just a few days ago, actually last month, we renewed it. We renewed it for a full 5-year term all the way to April 2020. So switching, and the last thing I'll mention on cash, which comes up a lot, is 90% of AMD's cash is located in the U.S. 90% of AMD's cash is located in the U.S. So switching gears, I'll go to the 2015 financial outlook. The financial outlook for the first half, if you take what we did on an actual basis in Q1 of 2015, and you add to that the midpoint of guidance that we provided on our earnings call in April, that's what the first half is. About $2 billion of revenue, gross margin to the tune of 32%, operating expenses slightly north of $700 million. We had net income, or actually a loss, as if you add up the numbers, you get a loss in the first half. Cash, Lisa said earlier, first quarter we ended up at about $900+ million. We think we end up at about $800 million at the end of the second half, first half, which is Q2. And then the free cash flow is obviously negative. In the second half, we are expecting revenue to grow 15% plus minus 3%. And gross margin should improve, especially with the newer product that we are introducing in the next few weeks, as Lisa mentioned. And that should help us the gross margin profile. And also the second half, semi-custom business, PC business is always better from a second half, first half. We're expecting that, and that's why you see the uplift in the revenue. Net income wise, we expect to be profitable, and with those numbers, we expect from where we end up in Q2 of 2015 that cash should grow, and we should be again at the higher end of the optimal zone between 800 and $1 billion, and be positive on a free cash flow standpoint. Now the question on cash comes up a lot. Let me address that, right? We have run different models for 2015. We have run longer term models from a cash standpoint. And any model that I've looked at recently in terms of revenue up or down, if revenue is down 10% and even up 20%, we think we can manage between the 600 and $1 billion of cash levels. And that's something that I know is top of the minds in many of you follow AMD, but we've done a lot of models, and that's the way it comes out, every model, every sensitivity that we run. So 2015 focus, if I were to summarize it, our goal is to stabilize the PC business. Invest in everything that Forrest talked about in the enterprise embedded semi-custom space. Continue the OpEx discipline, which frankly we have gotten very good at that with some of the actions we have taken, taking down the OpEx from 600 to 350. But very important that we fund the roadmap that Mark and Lisa and Forrest talked about today. We want to fund that roadmap because that's the future. And it's very easy to go ahead and sacrifice short term, cut your way to profitability, and not be able to fund the future roadmap. But that's not what this is all about. The other thing is managing the cash and liquidity, which is something that we have done over the last several quarters, going back to 2012 when the PC market shifted. And then most importantly, laying the foundation for growth and profitability. So let me switch gears here and get to the long-term outlook. Let me cover the capital structure and liquidity first. On the liquidity side, we believe we can fully manage cash at the higher end of the optimal zone. We can manage cash at the higher end of the optimal zone, and the optimal zone is $600 to $1 billion. And as we have managed for the last few quarters and the last couple of years, we feel we can do that with our long-term target. Flexibility with the $500 million ABL, I talked about earlier, fully available, up to $500 million if we need it, all the way to April 2020. On the debt side, when opportunities arise, we'll continue to de-risk the maturity profile like we did in the 2013 and 2014 timeframe. We want to reduce interest expense. That's a drain on the P&L. So if opportunities arise to do that, we'll definitely go ahead and do that. And then on the capital structure, for the excess cash that we get over $1 billion in the balance sheet, the expectation is go ahead and deploy that to reduce the debt. Because having more than $2 billion of debt in the balance sheet, from my standpoint, is still a lot. And by doing that, generating the cash, reducing the debt, our goal is to get neutral net debt position. Get to a neutral net debt position. Today is $2.2 billion, $900 million of cash, and we are fully cognizant of the work we have to do, but we are fully getting ready to do the work with all of the things you heard earlier today from an AMD long-term standpoint. And finally, from a leverage standpoint, to get our target optimal leverage ratio to about 2 times. Today it's significantly higher than that, but to work that down, in particular with all of the actions that I talked about on this slide. So before I get to the long-term model, let me cover some of the business drivers for computing and graphics and the enterprise. Thank you. In the enterprise, embedded, and semi-custom space. So going from left to right, if you go to PCs, in the PC space, we've been very consistent the last couple of years. We see the PCs, although it's a significant market, Lisa talked about 300 million units PC market. It's big, it's important, it's very important for our revenue base, but we see that from our standpoint, for our model, flat to down over the next few years, the PC part of it. On the graphics side, with some of the new products you heard about today, mid-single-digit % growth on the revenue standpoint for the GPUs. Professional graphics, server, and embedded, with all the exciting stuff, and I don't use the word exciting very often, but all the exciting stuff you heard from Mark and Forrest and Lisa earlier today, we think we can get double-digit % growth in those areas, and obviously the big one there is the data center with the server part that you heard about today. And then semi-custom, we've proven the concept. We've got a good game console business. There is a pipeline of design opportunities. We talked about even announcing new opportunities or signing one within this quarter, and that gets better for us as the semi-custom model matures and more customers show interest, because when you have done it and proved it for a high volume, high ramping product like the game console, others are interested in at least understanding or engaging with AMD in the semi-custom model. And we think from the base that we have today, we can continue to grow that in a mid-single-digit % growth. But from a financial standpoint, what you're probably more interested in is how does that translate to the operating margins? How does that translate to the operating margins? The computing and graphics segment today loses money. It loses money. We look at the financials, except for going back to Q1 of 2014, it lost money. And what you want to know is, even if the revenue is down, can we get back with the model that we have to have profit in the business? And we think we can. The profitability for the for the PCs and GPU space, we think is in the mid-single-digit %. And then for the rest of the businesses, at least, double-digit %, which would be at least 10%. At least 10%. That's the way it laid out. The thing that Lisa said earlier, a couple of times earlier, I want you to pay attention to, is we are focused on profitable growth. We do not want to chase revenue share or unit share where it doesn't make sense. It only makes sense if it allows you to be profitable, and then if you can grow the business from a profitable standpoint, it makes even more sense, and that's where you want to grow. AMD's revenue, no doubt, if you add the numbers in 2015, if you're doing the math from 2014 to 2015, it's a revenue down year compared to 2014. But from where we sit today and looking out for the next 3 to 5 years, these are our assumptions in terms of the assumption for revenue and the growth drivers for revenue and for the margins, and in particular, more importantly, operating margins, because in the semi-custom space, as all of you know, the gross margin in the semi-custom space, because of the NRE funding up front, is lower than corporate average. But the operating margin is where it gets paid up, because in the semi-custom space, by the time the product is introduced, you hardly have any R&D left. You don't have to spend in sales and marketing dollars. In fact, in the game consoles that are out there from a Sony and Microsoft standpoint, we don't spend marketing dollars. We don't need to spend any marketing dollars. The marketing, in some sense, is done for us. So what I'll get to next is the long-term targets. In fact, somebody told me that showing this slide, because you're showing it for the first time in 3 years, a lot of people are going to be waiting to see this slide because they've waited for 3 long years. And this is kind of how it lays out for us, right? Gross margin, with the products we are introducing, with the revenue mix that you will see from the various businesses that we have, and the products that we have in the space, in particular in the data center space, in server, embedded, and pro graphics, we think the gross margin on a long-term basis is somewhere in the 36 to 40% range. On the OPEX revenue ratio, this is something we are good at controlling. We're good at managing that. We've done that. Anything, the OPEX falls between 26 and 30%. And in particular, we will continue to fund the R&D roadmap, while staying lean in the SG&A area. SG&A area will be lean, but R&D roadmap when necessary, even for the longer term future, we want to fund it, but in all cases, maintaining the OPEX ratio within these targets to be somewhere in the 26 to 30% range. Operating margin, as I said earlier, greater than 10%. The margin accretive businesses that we have is really going to fuel that. The margin accretive business that you heard Forrest and Lisa talked about and the product that we're getting to will fuel that. And in the semi-custom space, as we mature the business, as we diversify across beyond the game console into other businesses, we think we can get better operating margins, and that also helps the operating margin of this particular target that you see here. So bottom line, as Lisa showed earlier, and that was really the punchline as we were discussing the presentations when we were putting this together, 50 cents EPS. Greater than 50 cents EPS is the target, to get to greater than 50 cents EPS. If we do that, right, and we are focused on everything we talked about from a product, revenue, gross margin, operating margin standpoint, and focusing on the bottom line for profitable growth, we think there is a free cash flow model that yields free cash flow in the first place. And from a modeling standpoint, you can assume that the free cash flow of the company is approximately equal to AMD's net income, And that's the models. And the net income, essentially, from an operating margin improvement, the OPEX leverage fall through is important. And then we will continue to stay focused on the financial execution as we have for the last 3 years. I always kid when I talk internally at AMD. I took on the CFO role at AMD in probably one of the most difficult times in the history of the company. October of 2012, I took on the CFO role. It was a difficult quarter. I showed you the profile in 2012. We have managed the last 3 years, and we are fully ready, willing, and able to manage the next 3 to 5 years as we deliver the long-term financial targets that you see here. So in summary, right, from my standpoint, it's really about sharpening not just the financial, but strategic execution at AMD, right? And the drivers or the tenets for success are exactly on this page, right? If you pull it all together in terms of everything you have heard, in terms of the technology, the vision, the roadmap, and the products, driving growth opportunities, gaming, immersive platforms, and data center is the key. And market share gains when it makes sense, and we feel that we can have margin improvement for profitable growth. That's important. The second thing is continuing the expense control discipline. Continuing the expense control discipline that we have implemented over the last few years, and making sure that we fund the future on the engineering investments for the long term, and also achieving consistent return on investments on IP investments. The IP investments that we make have to return investments. If it doesn't, we'll make a different decision. For example, in the DCS systems business, as Lisa talked about earlier, we got out of it. It didn't make sense, at least for the time frame. And from the system standpoint, we said we can't get an ROI, so go ahead and get out of the business. And that's what we did to make sure that we can get an ROI from an investment standpoint. The first two things are important, and then we want to bolster the capital structure. A lot of you have written about the debt load on AMD. I'm very cognizant of that. Having a lot more debt than cash is not a good thing. So we need to go bolster the capital structure. Manage the working capital is something we've done well. The last few years, actually, we've gotten good at it. And, we manage the inventories, we manage the working capital, and we definitely need to reduce the leverage from a viewpoint of the debt on the company. And finally, right, in all cases, not just for the company as a whole, but for every business that we participate in, we want to manage for profitable growth. And in the end, by doing all this, from AMD's standpoint, is generating consistent free cash flow. So with that, I'm going to round out here. I think you've heard a lot today, and we have, as Ruth said earlier, an extensive Q&A session. Looking forward to the questions that you might have that Lisa, Forrest, and Mark and myself can answer in the next session. Thank you.
Great, okay. Chris here, and his hand up. Wait 1 second, we'll get you a microphone.
Chris Rowland, FBR. Perhaps talk about the movement to 14 FinFET, timing, what kind of, we know it's 16, but maybe a little bit more. What products are going to migrate there, and what are effects on margins? Thanks.
Maybe, Chris, I'll let Mark start with the technology question, and then I'll follow up on the others.
Sure. Look, there's good progress with FinFET in the industry, and what we've been focused on is migrating our next generation of products in 2016 into FinFET. We're working closely with the foundries. We have test chips. We track the progress. So we're not, as usual, we don't release specific details there. But I can tell you I'm fully confident with the foundry FinFET ramp in 2016. I know some are going out early in 2015, and they'll be part of the early ramp. We're out in 2016. Looks quite robust.
So, Chris, just to give you a little bit more color on that. So what we've talked about today is that you'll see FinFET in our Zen-based roadmap. So that's starting first with desktop and going to server. You'll also see FinFET in our graphics roadmap. So in terms of margins, you would expect server and desktop at the higher end to be certainly margin accretive. Graphics is right in line with our corporate average.
Great. Jaron, there's a gentleman here with his hand.
Thank you. Mark Lapatsis, Jefferies. Thank you very much for the presentations. If I may, a question for Lisa, maybe a question for Forrest. Lisa, the semi-custom business, you started ramping 2 design wins on gaming in 2013, 2 you're expecting in 16 and 1 in 17. It's about a one a year cadence. Is that a reasonable cadence for us to think about going forward? And a question for Forrest, the data center business that you're excited about, do you think that to the extent there's upside in that business, do you think it comes more on the semi-custom side for your customers, or do you think it'll be more standard products? Thank you.
Great. So thanks for the question, Mark. So on semi-custom, I would say it's still a new business model for us. We saw the 2 big game consoles, as you said, ramp. We announced 2 new semi-custom wins at the end of 14 that will start ramp in the second half of 16. And then I mentioned earlier today that we expect to sign another semi-custom design win this quarter that will ramp in the 17 timeframe. I would say it's on the order of a couple, a year. And depending on the market, depending on the size, it'll be a lumpy sort of business. The important thing that we talked about, though, is the continuum of the business. So the fact is, whether it's embedded or data center starting as a standard product going to semi-custom, it's really an opportunity for us to deepen the relationship with customers. And so I'm not so focused on the sheer number as much as how are we differentiating in the business. Any Forrest?
Yeah, and then on the data center side, I think that I'm going to reflect back to that continuum message again. I think that having both standard product as well as semi-custom in the portfolio is a very powerful combination. And quite frankly, I think that we're very optimistic about both sides of that business. So I think you'll absolutely see standard Zen-based product from us in 17, and I think there's great opportunities on the semi-custom side as well.
Great. John, we have a question here in the middle of the room.
John Pitzer with Credit Suisse. I've got one question for Mark and then one for Lisa. Mark, just on the core improvement on Zen, 40%, can you help me better understand how much of that is the move to FinFET versus sort of the change in the architecture of the core? And as you think about predictability of your roadmap, you talked about it from the design side. I'm kind of curious from the Moore's Law side, how should we think about your progression down Moore's Law beyond 14 FinFET?
That's a great question. It's really why I showed the metric of instruction per clock, because what that does is it actually separates out the process variables. Process is very important. Look at the industry is ridden on, in its history, a traditional, huge bump you get node to node. And we've seen that be more variable in recent years. FinFET provides a very big jump, and we see a good opportunity in 10 nanometer beyond it. When I showed the 40% instruction per clock on the Zen core, that's really taking out the element of the FinFET process. And it is talking, in fact, about the microarchitectural changes we made, the execution units, the cache subsystem, the memory, and the bandwidth of how we bring and actually feed the necessary data and instructions throughout the core. So it's very much separate from the process technology dependency.
And then, Lisa, qualitatively, you've been talking about the second half as being kind of seasonal. When you look at the numbers Devinder kind of gave quantitatively, that applies a much better than kind of normal seasonal second half. Is that your expectation of share gains, or do you actually think, given the low base effect in the first half, that the overall industry is just going to have a better second half, or is this other revenue streams outside of PCs that are getting you comfortable with that half-on-half growth projection?
Yeah, John, so good question. Let me provide just a little bit more detail there. So in terms of, Carrizo. I think that's another driver. And then the third thing is, because our business is better diversified right now, we have very good visibility into what semi-custom will deliver in the second half of the year. And so, based on our current visibility, that gives us, the range of guidance for 2000.
Right, we have another question here in just the row here. Thank you.
Sanjay Chaurasia, Nomura Securities. Mark, I have a follow-up on the IPC question. You talked about 40% improvement. Clearly a significant improvement, but my understanding was the gap with Intel. And on that two-part question, where all it allows you to gain share, is it enough to gain share in the high-end servers? And part B, the slide indicated it's a second half launch for Zen. That's what at least it looked like. So how long would it take it to trickle down in your roadmap?
Sure. So I didn't show specific comparison of the Zen core to a competitive core in the industry, but I can tell to be going out in our desktop products. We haven't given specific dates of the particular product launches.
I think if I just add to that question, I think the important thing that Mark mentioned and that I will reemphasize is this is a multi-generational commitment we're making to high-performance CPUs. So the first data point is Zen. I think we have teams deployed on the next core revisions as well, and that gives us good confidence in terms of the competitive nature of the roadmap.
Great, we have some questions over here.
Thanks. Two clarifications for what we saw or didn't see. When you were talking about your future cores, you highlighted the Zen core, but traditionally you've run two separate cores, a high-end, I guess those were the earth-moving equipment, and then the big cats. So are we not going to get any further big cat cores going forward? I mean, and what happens to, say, game consoles, which are based on those things?
Mark, do you want to?
Sure. So one of the things that we're doing, and it's quite accurate what you recognize the roadmap. We had the Cat family and the Bulldozer family of performance optimized with Bulldozer and actually performance per watt optimized with the Cat family. That's what we've done historically. But what we're doing is leveraging the scalability we get with FinFET. And what we did with Zen was we optimized it so that it could leverage that FinFET scalability. And so you can run it at a higher power and very high performance and actually scale that core down right into, APU into the mobility space, all right, and leverage that at a much lower power, yet still leverage that efficient instruction per clock, that microarchitecture gains that we brought into Zen and realize that benefit. So very much brings us a much more focused and efficient approach going forward. And again, we've leveraged that efficiency to add ARM into the portfolio. So what we've got is one x86 core that's scaling very well across the markets that we're targeting. And you saw that in 2017, we'll have with the ARM v8 license, we'll follow it with a performance-optimized ARM core as well.
Great, and just one quick one following on that, talking about the ARM cores, and I guess on the roadmap we saw a server product for our ARM-based server product end of this year, a follow-on next year. But then I think, Lisa, you also mentioned the microserver market hasn't been as big as you'd thought, and you've also divested C-Micro. So do you expect for the indefinite future to keep developing standalone ARM server products, or is it just these next couple of years that we're going to have them to run out what you got in development?
Sure. So one clarification I'd like to make, and then I'll let Boris answer the roadmap question. There has been a little bit of confusion about whether the C-Micro systems business actually is a statement on whether we believe ARM is or is not important in the chip side of server. I think those are two separate decisions. One was a decision on systems business and systems investment relative to the ARM chip investment. I think, as we said during the presentation, it's an important business and an important market for us. So I'll let Forrest comment on the details of the product roadmap.
Yeah, certainly we anticipate introducing the A1100 Opteron, the first real ARM server chip, in the second half of the year, with the ecosystem fully ready. We do think that the opportunity there, there is an opportunity there in the long term in the standard server market, but I think that is taking longer to develop than some forecasts. But we think there's a tremendous opportunity for ARM as we look at many different applications or different types of enterprise equipment migrating away from proprietary solutions onto software-based server-based solutions. So you should anticipate that we're going to come out with the A1100. We're going to follow it up with chips based on K12 at the upper end of the performance spectrum. But we're going to we'll certainly stay participating in the broad enterprise infrastructure space with ARM.
Great, and there's another question here next to David. Thank you.
Hi, Stacy Rasgon with Bernstein Research. Two questions. First, maybe a bigger picture one. So you've outlined a pretty broad strategy here. You've talked about focus on high-performance computing cores. You've talked about a big focus on data center and infrastructure. You've talked about a focus on embedded and IoT. How is that different from Intel's overall arching strategy on an R&D budget that's 15% as big?
Yeah, so Stacy, let me take that and perhaps try to narrow it a bit. I think IoT is a very, very big market, and clearly that's where a lot of talk in the industry is. We are not going to address the entire market. We're really going to focus on the places where we can uniquely contribute, and it has its foundation in our IP. So what are we good at? We're good at high-performance computing. We're good at high-performance graphics. We're good at workloads that utilize that kind of capability. And I think we can be much more flexible in how we choose to run the business model. We are not going to be in the endpoint space. We're not going to be in the smartphone space. In fact, we're actually not competing really in the low-end tablet space where there's a lot of silicon consumed. So if you have a fab, you need to focus on silicon consumed. We don't have a fab. We have to focus on where can our IP be monetized. So it is very much synergistic subsegments of these spaces versus, we're going to attack the entire IoT market.
And the broader question around data center, and I mean, I don't want to be blunt, but you talk about being good at this. At the same time, I mean, in servers, you have 1.5% market share, down from 10% over the last 4 years. In PCs, you talk about a long-term target to be flat to down. You've been down 20% a year for years. How should we think about these targets, I guess, in the context of that history and where you're going with this? What gives us confidence that those improvements are now happening when this has sort of been the plan for a while and they haven't happened? How do we get confidence around those?
Yeah, so let me try to frame it in this way. And, again, I want to address your question head on because it's an important question. In data centers, the reason we have 1.5% share today is we decided not to invest. If You take a look at our core roadmaps, we decided not to invest in high-performance computing. Now, when you want to get back into that market, the truth is we have the technology, we have the IP, we have the people to do that. We need to set the design point there. And that's what Mark was talking about. When you set a design point, a brand new microarchitecture from scratch, it takes 3+ years. We've been working on it. And from that standpoint, that's what gives us confidence. You know, if you think about just all of the various places that we've been able to compete, it is really about the technologies, especially in the data center. You know, I've spent an enormous amount of time with customers. I think Forrest can also talk to the customer aspect of it. The data center wants AMD. Customers want us to offer the technology. What we must do, though, is it can't be just we're the cheaper solution. So that is not the right way to do it. It is to start with technology that's competitive and ensure that we're wrapping around it things that others won't do. And that was the multiple workloads, you know, that Forrest talked about. So that's the data center market. And maybe let me let Forrest comment, and then I'll come back to PCs.
Yeah, and I think, you know, one of the things that's very important for AMD, first off, it's a very large market. And, you know, we're not going to try to cover every space in that market. You know, I think we're being very thoughtful about, you know, where we see opportunities for the parts that we have, the technology that we have, the flexibility we have in the modular approach that Mark outlined, to be able to target specific segments of the market and produce differentiated solutions for specific segments of the market. You know, in a way, I'll tell you something I've told people internally. You know, you're absolutely right. We've got 1.5% server market share right now. I'm telling my teams that's an asset. When you have, you know, 30 or 40% share, you have to think about your strategy has to be centered on broad participation, general purpose, you know, very broad design points. When you have 1.5% market share, you know, you can think differently. And I think that's where AMD has had success in the past, where we thought differently, where we identified, quite frankly, 64 bits a good example, or even the integrated memory controller. Things Intel doesn't want to do, or things Intel is not doing. And there's a broad enough disparity, a broad enough range of workloads and evolution in the data center now. There's plenty of opportunities for us to focus and optimize and substantially grow that 1.5% share.
And then, Stacy, let me get back to the PC question, because I think that's an important one as well. You know, the PC market has really undergone a tremendously volatile time in the past couple of years, and there have been, you know, various different aspects of it. AMD's PC market is, if you look back in 2012, was not reflective of the overall PC market. We were heavily concentrated in low-end consumer PCs. That's our heritage. That's where we had the majority of our share. That's where we played, let's call it the cost-performance game. That portion of the market has seen the most volatility. We have definitely lost share there. Some of that share we've decided not to take because it was unprofitable, given some of the you know, marketing development funds that were in place. But what we have done is we have really made progress on changing the mix of our business. If you take a look at our ASPs in PCs, they've actually held their own. If you take a look at subsegments, like, for example, the high-end mix, you know, competing against Core i3 and i5, we've actually done quite well in those segments. So we've replaced some of that low-end share, let's call it, with better ASP business. It's a process. We're going through a process in that PC business. There's no question that I want to take share in the PC business, but we're going to do it with profitable share. And that's on the computing side. On the graphics side, I think share has gone back and forth a number of times. We've actually gained share in OEM graphics. We've lost share in desktop graphics. And as our technology comes out, I believe we will show, you know, share gain possibilities. So I'm not asking you to trust me, but I'm asking you to understand that we understand our business. And from that standpoint, we've laid out what are the segments that we think we can compete. That's where we have to lean in. That's where we have to invest.
Thank you.
Now we have one here in the middle, Ian. This gentleman here with the glasses. Thank you.
Yeah, thanks. Ian Ng, MKM Partners. First question is from Mark. I mean, this performance per watt expectations across a lot of your roadmap. Could you talk about low power design, where you're advantaged? I mean, you and Jim Keller have a track record here but obviously competition's out there also. Where is your exact recent innovations and advantages? Thanks.
That's a great question. And you think about it, look at our APU roadmap. In fact, I included a slide in the presentation showing the APU roadmap and the 10x energy efficiency we gained over the 6 years up to 14, and a big gain that we had with Carrizo, the excavator core, and then the overall sixth generation APU. What we're doing is clearly leveraging that. So when I describe what we did with Zen from instruction per clock, that's about performance. That's about the microarchitecture for performance. We didn't back off at all, continuing gains in power efficiency that we'll drive. We've invested in modeling, the detail that we have, because it's all driven by data. You have to do exhaustive analysis. You have to run applications, traces. You look at where is the power being consumed. And it's, frankly, it's a lot of hard work. You ratchet your way through and you manage those sources of power dissipation in the workloads that you care about. It's the same thing in graphics. And so what we're doing is we've created a synergy that we didn't have before at AMD across the teams. We've broken down silos. We're taking the learning that we have and across our APUs, and we're applying it on the other segments. And so what you're seeing in that commitment that I showed you in the graphics roadmap is applying those techniques. We've been really leveraging on the APU side and bringing it directly into our discrete graphics. It's blocking, tackling, hard work, analysis, simulation, and managing the power down with again, techniques that we've talked about in technical papers of really managing the switching activity, getting work done. We have a philosophy, return to zero. Get the workloads done and get to where your power management's kicked in and you have no power dissipation nor leakage where you can turn off power islands. So it's very much engineering focus and application.
Thanks, Devinder. Just a quick clarification. Second half gross margins on new products, up a bit. Are the traditional second half headwinds still there, like game console ramps and things like that, or is that abating at all? Thanks.
So from a revenue standpoint, if you're talking about the second
gross
half,
margins.
Essentially the semi-custom, typically if you go back and look at 2014, the behavior was second half was stronger than the first half, and we expect the same. And then from a revenue standpoint, if you look at PC market, we have new products coming up. Typically the second half is stronger than the first half, and we're fully expecting that. And then in the space of new products, we think the new products allows us to become more competitive, and therefore it benefits us across some of the other areas that we play in.
Yeah, and I think, Ian, your question was about some of the gross margin drivers as well for the second half. Yeah, so do you want to comment on second half gross margins?
Sure. And then gross margin, if you look at it from a new product standpoint, that benefits. The new products are more competitive, therefore you get better gross margins. And then obviously you have the mix of the business improving in the second half, and that helps the gross margin. And that's why we think the gross margin can be better in the second half than where we ended in the first half. So I'm calling it flat to up in the second half compared to where we ended in the first half of 2015.
Great. Next up is a gentleman here in a white shirt just in front of the last person. Thank you, Chris.
Matt Ramsey, Canaccord Genuity. One question for Lisa and then a quick follow-up for Mark. Lisa, maybe a different way to ask Stacy's question is, you had a slide where you listed what we're not going to focus on, right? And I think it was smartphones, tablets, IoT endpoints, or microcontrollers, right? But I don't think any of those things, when any of us walked in this room today, we really thought you guys were focusing on. So Devinder's guiding down OpEx in the back half of the year slightly. Maybe you can just talk about the focus and where those cuts are coming from.
Yeah, so we have made some key decisions relative to simplifying what we're spending time on. So, for example, when we decided to exit the C Microsystems business, that is a source of OpEx dollars that we can now reinvest in the data center side of the business that we've talked so much about, because there is a reinvestment that's necessary there. When we look at simplifying the roadmap and how we've talked about the roadmap simplification, we've looked at the products over the past 6 or 7 months. It has really given us a chance to relook at the products and say, okay, which are the products that are truly going to return on investment because they give us, strong market positions, and which of the products are not. So there are other things that we've done to simplify our roadmap. For example, in the past, I've talked about 20 nanometer being a node that we did some designs in. We started some initial designs, we run some silicon. Those products are probably not going to go into production because we think we can get much more bang for the buck out of the FinFET technologies going forward. So a lot of, I would call them micro optimizations in terms of ensuring that everything that we're doing is paying off. You know, Mark talked about the x86 and ARM leverage. That's very unique to AMD. Okay, the fact is that we're doing x86 and ARM, and we keep getting asked, you know, how could you do both, given the ecosystems that both require? He is creating leverage between how we build those CPUs together, and we've created more leverage in the way we put the roadmap together. And I will say that with Forrest joining AMD, we've had a chance to relook at some of the things that we've done as well. So the thought process of that particular slide was there are some large markets that we won't invest in. I still get asked very often, why aren't you investing in mobile? Because that's where all the units are. So I think it's important for us, you know, to restate that. But this concept of simplifying and, you know, really ensuring that our development dollars are spent on the highest leverage opportunities is something that is, you know, throughout the company.
Great, that's helpful. And Mark, I was kind of excited about the high bandwidth memory slides that you guys put up. How applicable is that into your higher volume businesses, be that PC or eventually server?
That's a good question. So we're on HBM Gen 1, and the discrete graphics are rolling out. We're very happy with the performance we're seeing. We're coming up on ramp, obviously, as Lisa said, in weeks. We'll be announcing product. And it's in the high end of our product space. Again, details to come. What you're going to see with HBM is like you've seen with any other new memory technology. It's all about scale. So as the volume comes up and the costs come down, that opens up new markets. So there's nothing, you know, any of the segments, and you know, you follow it closely, so you know where that can benefit from that type of lower power, you know, and a higher bandwidth. When the cost comes down sufficiently, it'll will likely make sense to extend its footprint beyond the discrete graphics.
We have a very back of the room in the middle there in the check shirt.
Okay. Two quick clarifications, then two questions. The clarifications, Devinder, what was the amount of cash in the U.S.? 9-0 or 1-9 or 9?
More than 90%. So, you know, the cash that we have on the balance sheet, you know, more than 90% of that is resident in the U.S.
And then the second clarification, Lisa and yourself have both talked about, I think, $800 million in cash for the June quarter and between $8 and $1 billion for the December. I assume that doesn't include any ABL draws or any other debt additions. That's a net cash.
At this point, no. At this point, no. We're planning with the cash management actions that we have, and we've done that. $800 million on a I don't want to say natural basis. There was a draw on the ABL in Q1, so just to clarify, we did pay off the $42 million of convertible debt I talked about, but that's just trading, you know, lower interest from an ABL standpoint in the convertible note. But beyond that, you know, no plan to draw on the ABL on an incremental basis.
So that 800 guide does not include a draw on the ABL or any additional debt?
Does not include incremental draw. We drew, if
right.
You go back and look at, that's right. That's right. Other than the $42 million that we paid off, there is no incremental draw to get to that 800.
And then, so the two questions, the first one, any way you can answer this, how should we think of inter-quarter working capital swings? Or maybe asked another way, is inter-quarter on numbers that we don't see, do you ever end up going into the ABL?
You know, intra-quarter is a difficult question in an evolving or transitioning business model, right? I think the takeaway you should have is, you know, we manage our working capital on a very tight basis from a viewpoint of serving the customers. So, for example, when we gave guidance for Q2, one of the things I said is inventory from Q1 to Q2 will grow $100 million. And that's primarily because we see, first of all, the stronger revenue in the second half, and then in Forrest's business, to satisfy the higher ramp in the semi-custom products, you know, we have to get the inventory, produce the units, get it to our game console customers ahead of time, and therefore you have from a timing standpoint. I mean, intra-quarter working capital is typical. You know, you have obviously the cash collections and you have the inventory management coming in at a time, but I'm not too worried about that from an overall standpoint.
Okay, and then the last one, sorry. About 2 management teams ago, there was talk of ending the option, the take or pay options with global foundries and sort of being, how this year the wafer supply agreements, again, a take or pay. Is this a decision that you're making in order to get better commercial terms, lower pricing, or is it just that all that's available to you, and how do you sort of weigh potentially, lowering the take or pay amounts or even removing the take or pay nature of the contract versus pricing?
I won't comment on the 2 management teams ago, what they said. I'm not familiar with that concept. I think if you go back and look at the WSA, which has been in place since 2009, we signed the WSA in 2009. And since that time, in 2011, for the first time, we did an annual contract on a take-or-pay basis. And how that helps us, if you look at it from an AMD standpoint, is you get into a discussion, typically at the end of, let's say, end of 14, you got into discussions about what's our view of the market, the mix of product. We make at Global Foundries today, not just the PC-based products, but starting in 2014, we also made the semi-custom product and also the graphics product. So we look at that, and then obviously capacity is allocated for AMD's needs, and that discussion becomes a take-or-pay. There's 2 aspects of that. There is an obligation to take, but there's also an obligation to make. And from my standpoint, sometimes in a situation that we live in the foundry world, that's a good thing because it's assured supply. From a customer standpoint, we can go, for example, to Sony and Microsoft and say, this is how much product we're going to make, and this is where the supply is going to come from. The take or pay, I wouldn't read too much into that. It's an annual contract we have done now. We've done, amendments to the contract. It's an annual contract, but it's very good for us to have a discussion with one of our key foundry partners to say, this is what we need, and then we go ahead and take that. And the other thing I would add is if you go back and look at 2013 in particular, as the year came to an end, the take-or-pay agreement that we had with Global Foundries earlier in the year was higher, but as the business evolved, as demand profile changed, we did not take as much as we signed at the beginning of the year with no special trigger payments, no penalties or whatever, and that's just, I think, a function of the relationship as it's evolved between us and Global Foundries.
We have a question here in front of the camera, directly in front of the camera.
Quick question for Forrest on accelerators. I wanted to clarify, so have you already developed accelerators in-house? Do you have that product or not?
I'm sorry, do we already have?
Accelerators?
In terms of APUs, we have not yet announced a server-centric APU product.
Now, because I saw it on the portfolio, so I was wondering, it would seem like you'd be in a unique position having a CPU and a GPU to be one of the few companies that could address, Opteron and then having an accelerator in-house. And is that kind of the plan, maybe to differentiate?
Yeah, and I think I mentioned in the 2016-2017 roadmap slide our intention to do not just a server APU, but a very, very high-performance server APU. And so, absolutely, we see one of the key assets for us in the enterprise business, particularly as, again, these computational demands continue to increase. Being able to wed the two together, gives us something that's worth more than the sum of the parts.
And last question for me, just when you talk to customers and having come from Dell, et cetera, does it look like customers now is it mandating now almost accelerators? I mean, how broad is this going to be as a trend, maybe as an add-on feature within servers? How important is it becoming?
I think it's very workload specific. I think, if you look at, and it's a little bit hard to predict what it's going to be in 3 to 4 years. There's many traditional HPC workloads which are very amenable to GPU or other types of acceleration, and that's been growing at a pretty steady clip. If you had asked me that question about 2 years ago, I would have given you the answer that, well, I think accelerators will always be important, but never be dominant by any stretch of the imagination. However, as over the last couple of years, we've seen a number of new algorithms really burst onto the scene and burst onto near-term commercial application. And I think that has tremendously increased the interest and the potential commercial demand for accelerators. And those were, workloads that quite frankly, we and others didn't predict, a couple of years ago because, quite frankly, it was a fundamental breakthrough. I think that I do think that acceleration technology of all types will become more and more important going forward in the enterprise. But I think equally important is you have to have the right software and systems architecture to be able to make that acceleration easy for the developers to use. And the whole HSA foundation and that whole approach is all about creating standards around that to lower the hurdle rate for developers to actually develop and utilize that acceleration facility.
Thanks.
Great, there's one just in front of you here.
Yeah, thanks for taking the question. So if you look at your sort of 10 or 15-year history in the past, you see that there have been moments where you have done pretty well in certain segment of the markets. For example, in 2007 in the server market, recently in the console market, but it seems like it's just never enough. It seems like, in that sense, do you really need to think about your business model? Do you need to think about potentially partnering with some bigger organizations in terms of your, going to go-to-market strategy perspective? Seems like, what you have been doing for the last 10, 15 years, some periods of nice momentum, but then you cannot sustain it. So how should we think about that going forward?
Yeah, so I think that's a very good question. And, it also gives me an opportunity to maybe just step back a little. AMD is a company that I will say, most people will say, we have a lot of good technology, we have a lot of good people, we have a lot of potential, but we haven't seen sustained momentum. So when Opteron was great, we were 25% market share, we had better technology. But then we missed the next node, and so we lost that technology momentum there. I believe that what needs to be different is really a different way of thinking about how we attack the market, okay? Building the products, and they will come, that's sort of one aspect of it. Building products in markets that are fundamental growth markets, and that we have differentiation beyond just the speeds and feeds is critical. So it's about, not just the technology is very important, but it's about the customer relationships that we generate. Why are we so proud of the game consoles? Winning them, very, very hard. But once you win them, that business is with you for 5 to 7 years. When we look at the segments of the data center that we're going after the traditional enterprise space is interesting, but going after the new workloads where we can really provide differentiation beyond just the speeds and feeds. The speeds and feeds are kind of table stakes. It's, as Forrest said, what can we do around the memory technology? What can we do around, workload optimization? Combining our CPU and GPU technology. That will give us longer standing, stickier, differentiation. So it is absolutely true. My goal in life is not to be a flash in the pants. It is to figure out how we build a 3 to 5 year consistent profitability, cash generation, and sustainable operating profit. I believe we have a great technology platform to that. We have to marry it with the right customer relationships and the right differentiated products to do that.
Yeah. If I can just add a quick comment, that's what's also quite fundamental to the technology roadmaps I discussed earlier. Is yes, we're very focused on we've got great products this year, a next generation of products in FinFET. But what I emphasize, and I want to underscore that point relative to your question, is we have the roadmap beyond that. We didn't do a point investment on the key engines we've generated. Always will, in fact, right? This is the new model of our R&D development in AMD, is to be doing a next generation and a leapfrog team that's working on what follows. And we'll do that, across the elements of our portfolio, our IP and technology portfolio. That's fundamentally different.
Okay, we have time for a couple more. There's a gentleman in the very back of the room in a blue shirt.
Hey, thanks. Can you talk about the gaming opportunity, not the consoles, but the casino games? Where is that opportunity coming from? Is it you're gaining share in the games, or what's going on there? And then I'll probably have follow-up.
Yeah, so clearly we saw casino gaming as a close adjacency given the technology portfolio we'd put together for the console gaming. So we've been attacking that one now for a couple of years, primarily with standard products, although there's some interesting semi-custom opportunities there as well. Our initial focus was, I'd say, in the traditional slot machine and traditional casino game market. We've recently opened the aperture of that and are now attacking pachinko and patchy slot as well. And so we think we've got number one market share in what you might call the traditional casino gaming already in very short order, and now we're expanding into some of the adjacent game categories.
Is that end market growing in terms of number of slot machines that are being ordered, or is it growing because there's more content per machine?
I think it's a little of both. I think, quite frankly, on that second part, we see multi-displays being added to many machines. So you're moving from a single display on the poker machine to 3 or 4 displays on the front and the sides of the machine to try to pull the consumer in to play that particular box. So we see many more displays, as well as much richer graphical content and a lot of 3D content coming to casino gaming as well.
And lastly, and I apologize if this has been asked because I've been in and out, with regards to consolidation, can you discuss it? It's obviously been talked about out there. What are your thoughts?
When you say consolidation, you mean semiconductor M&A?
Exactly.
Yeah, so look, it hasn't been asked, so we will certainly address that. Look, we just spent a couple of hours laying out a long-term strategy, and when you look at the strategy, we feel really good about where we're investing and that we're investing in the right growth markets. That is absolutely our focus. When you look at the semiconductor landscape, there are lots of things happening. I think we view ourselves as having a very unique IP portfolio. When I say IP, I mean technology, products, and patent portfolio. So I think from that standpoint, that's good. And we'll always look at the landscape and have it continue to evolve, but I think the single most important thing is executing on our strategy.
Right, we've ended up with the striped shirt, Joe.
Great. Thank you. It's Joe Moore from Morgan Stanley. Can you talk about the high bandwidth memory? That's been an expensive product. It sounds like from the silicon interposer technology has been expensive. Can you talk about your ability to penetrate sort of mainstream GPU price points? And there's been some, as I talk to your channel partners, there's been some concern that you're limited to 4 gigabytes of memory buffer. Can you talk about if that's a limiter?
Yeah, maybe, Joe, I'll start and see if Mark has anything to add. So we haven't announced details of the product, and again, I'm not going to get into the details of the product. High bandwidth memory, though, is a very differentiating technology. You shouldn't think about it in comparing speeds and feeds relative to today's graphics cards. So if you look at the bandwidth that Mark showed, both between the memory and the GPU and the power efficiency of it, it's like comparing apples and oranges. We'll go into a lot of those speeds and feeds when we actually launch the product. The reason we brought it in is we thought that the enthusiast class graphics is the place to introduce this technology. And really, when you introduce new technology, you're testing it in manufacturing and testing all aspects of the ecosystem. We think you're going to think about graphics cards differently. And I think that's the excitement around it. How do you bring, what used to be a very, very high-end graphics card that would only go into big gaming rigs and put it into, different places? And that's where we see the growth going forward. I don't know if you had any...
Well, you asked about the cost point, and it really goes back to my comment earlier. It's about economy of scale. Like any new technology, as you ramp, you get manufacturing efficiencies, and you bring the cost point down. And again, that's my expectation with HBM.
Okay, and then just more broadly speaking, your GPU business last year was worse than your CPU business. And I feel like the CPU shortcomings you had, losing share in the low end, are pretty clear, but I'm still a little unclear on why GPU was so difficult for you. It seemed like maybe you got leapfrogged a little bit at the high end, but your product portfolio was pretty good. What happened from a revenue standpoint last year?
Yeah, so let me talk about the GPU business. So we don't typically break out in granularity the GPU business from the rest of the business. But the way to think about it is the GPU business is, I would say, a back and forth, typically with technology. When we announce a really strong product, we gain share. When others announce a product, there's a little bit of share going back and forth. Specifically in the GPU business, we actually gained share over the last couple of years in OEM graphics. So if you look at some of the design wins that are out there now, particularly with the Apple iMac, and that's an example of a OEM graphics design win, that we won and gained share over the last couple of years. We did lose share in desktop graphics, particularly in the AIB market. A lot is going to ride on our product portfolio. So the second half 15, the launches around our top to bottom portfolio in both mobile and desktop are important. Mark talked about the power efficiency that we are bringing in 2016 with the FinFETs. That will certainly improve our graphics competitiveness. And the portion of the graphics business that I would say is still the most untapped portion is the professional graphics workstation and the GPU compute that Forrest talked about. So it is about, I would say, where do we focus our efforts, in the graphics business? We are going to focus on the areas that are higher margin, because that certainly is back to profitable market share. But we feel very, very good about our competitive graphics portfolio. We need to invest more in software, for sure, and we need to continue the investments in the new technologies going forward.
Thank you.
Great. Well, that actually concludes our questions and answer session. So we will say goodbye to the folks on the webcast and thank them very much for joining us today.
Thank you very much.